also have hog market analysis this week with University of Missouri Extension economist Ron Plain. The latest export data released last week shows June pork shipments were up less than 0.1% from June 2014. During the first half of 2015, while foreign buying for U.S. pork was weak, American producers also ramped up production. Outputs for each of the 6 months were above year-ago levels, and 3 of those months, February, April, and June, set records. We started our conversation with Ron Tuesday morning by asking why the pork export market has been so sluggish.
Yeah, it's been a disappointing year, Jeff, for sure. The big problem is the dollar's very strong relative to foreign currencies, and that makes U.S. product look very expensive to foreign customers. And the flip side of that, it makes foreign products look cheap to U.S. buyers. And so exports of pork down about 5% in the first half of this year. Imports, on the other hand, up sharply from a year ago.
Is it surprising that imports are up?
Well, not really, given the situation. Like I said, the dollar is a big factor in this. The other thing is that we had some very strong prices last year and into the first part of this year for hogs and pork, and that just made us a very attractive place for foreigners to sell their product.
So imports are up, exports are down, and production over the first half of the year has been really, really good. Where is all of that pork going?
Well, consumers are eating more. Beef supply is down this year. Turkey supply is also down, and so it's been a good domestic market. Domestic demand for pork has been up in the first half of this year, and so U.S. consumers are soaking up some of the extra pork.
Should we expect that we'll see further easing in the meat counter?
Well, yes. Seasonally, hog prices tend to decline as you move into the tail end of the year. Usually somewhere around August or September is the peak in grocery store prices for pork. So yes, once fall gets here, consumers ought to see a little bit more attractive prices in the meat case.
I should ask about production. Do we expect less as we go further into fall?
Maybe a bit less. Gosh, we've been killing lots of hogs this summer. 10 weeks in a row now that slaughter's been up 10% or more compared to a year ago. For the year, we're looking for the second highest hog slaughter ever, behind 2008, and so probably somewhere 7.5% more hogs to be slaughtered this year than last year.
And weights?
Fortunately, weights are down. Last 19 weeks now, weights have been lighter than a year ago, so lots of hogs, but producers are compensating a bit by moving them to market a bit sooner.
Where are market prices right now, Ron?
Carcass prices for hogs around $73 per hundredweight. That's equivalent of about $56 per hundredweight on a live weight basis, and a bit lower than where we were earlier in the summer, but there's probably some more decline going to be in front of us.
When you look at market prices, Ron, are they moving as you would expect on a seasonal pattern?
Yes, normally we get the highest hog prices of the year in the summer months, and that was the case this year. It wasn't all that good of a peak in prices because of the heavy hog slaughter. And then seasonally, as we move into the fall, normally we'll see lower prices, and that's our expectations for this year.
The big question now, how does that affect margins for producers?
Well, we're making money this summer, as we often do. May profits around $23 per head. The preliminary numbers on June says also in the low 20s, and again in July. We'll do well this summer. We'll probably be back in the red ink by October. Fourth quarter, probably negative, somewhere around $5 to $10 per head.
Overall for the year, a profit?
Yes, a slight profit this year. Last year was the best year ever for hog farmers, and so even a slight profit after that kind of performance is a good year.